Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, it's Friday. We still got some news to come here yet, but we're also like, oh man, what's wrong with my voice? Holy crap. Should have warmed up first, huh? We're still on alert. Like, yesterday, it kind of seemed like the whole Israel-Iran thing, like, died, but, like, maybe it was just delayed. They're still on high alert. I'm kind of seeing some rallying in the markets that possibly could be due to that. So I think that we will still have a little bit of a hairy session. So let's come over here and take a look. The open, I mean, that's a decent amount. We are going to get U.S. import prices in a little bit here, but I'm not going to worry too much about that. Let's come in and look at the charts. So here you got the 10-year treasury. They kind of settled down towards the lower end of the range. They did kind of get that little bounce that I was looking for, but like not until much later in the day. But now here in the overnight session, they're kind of retracing that, and they actually already breached yesterday's high. So we you know, a little bit more likely for us to get like upside action now because of that. And again, like one of the headlines that we're getting overnight is that they still see an Iranian attack on Israel as imminent. So the S&P 500 selling a little bit this morning, but a pretty good recovery yesterday. Oops, I still have my speakers on. I always forget to turn them off. Right. Oil has settled down a little bit, but it's at the higher end of its range. Gold and silver taking a big jump overnight. I've already seen Shanghai Exchange increase margin requirements for gold, so they're like already trying to get ahead of this. This move in gold and silver has been spectacular. Okay, here's copper. Copper not too shabby either. And the Japanese yen, they're doing okay, I guess. They kind of recovered a couple of key levels. The dollar up above 105.5, and Bitcoin still just kind of going sideways. Oh wow, look, I did that all before we actually got the news here. So they're looking for U.S. import prices to be spot 3. Okay, here we got spot 4 versus spot 3. So not necessarily a good thing. That number is not usually too big of a mover for the treasuries, though. All right, so let us come in and do need to find some sort of a script or something to do that faster for me. All right, so for the flows here today, momentum is blunted. We do have, what is it? U of M sentiment and inflation expectations. Still have Fed speakers and fears of Iranian strike. Smart data. Hello, Seth. Smiley face. That smiley faces seems a little, I don't know. That's not normal for people to say hello to me with a smiley face. I don't know how I feel about that. but it's good to have you on the stream. New name, Andre. How are you doing? He's here every day, man. Every day. I commend you, sir. What else do we got today? Is that everything? Well, we should mention that it's Friday flows. Friday flows tend to die early. Everybody wants to get it done and go out for the weekend, right? So that's what we got for today. Shall we start? Well, Treasuries, at least for the moment, don't seem like they're going to do anything too big. Just placed some meeting at work for Monday and thought I'd come on here and trade some treasuries. Yeah. Well, you know, Fridays can be good action, but I think that it's going to be a little quiet until we get consumer sentiment. Oh, did we finish the playlist? We finished the playlist. All right, so let's peek around a little bit, see where we got. JP Morgan slides after Diamond warns on net interest income and outlook disappoints. That does not bode well for the other banks. Intel and AMD slide after Beijing tells telecoms to phase out foreign chips. Ooh. That would hurt. That would hurt. What, it didn't hurt Nvidia too? No, we don't need that ATR anymore, do we? Apparently not. Oof, yep, that hurts. That hurts Intel. Ooh, Intel's getting back into some prices that kind of look a little attractive to me. Like below 35 wouldn't be terrible. Of course, if we're going to have a recession here or the market's going to go into a bear market, I wouldn't be surprised to see them below 25. But Brian Gardner, good morning. You got coffee. You know, it's like all these people, it's really weird to me, the number of YouTube channels out there that have like coffee as like their brand, you know? Like a lot of these really big YouTubers, part of how they got popular was just filming them making their coffee and talking about something completely unrelated. It makes no sense to me because I do not drink coffee and I do not like the smell of it. But it's a thing. I know, you people love your drugs. That's what it is. Caffeine. Toucan. Oh, but he deleted it. Okay, so I'm not going to repeat that one. Thought I saw something that was, oh, actually something has already happened with Iran, but no. The biggest story in the markets, I think, right now is that gold took a huge gap up overnight. That's a little interesting. U.S. military deployed a missile ship with advanced defense capabilities near Israel. Okay, so my news squawk is telling me that oh man, interesting. Okay, so the story is Israel is bracing for an imminent attack in the next 48 hours. I had already seen that news story on my like news squawk morning synopsis and like Twitter and everything else. But apparently that story hit the Bloomberg Newswire as well, and that was probably why we got that big spike up in the treasuries. So this is going to be a hairy session. You think they'll do it? So Israeli media yesterday was saying that Iran was about to attack Israel and chose not to because the United States was saying that they would respond with Israel if Israel was attacked by Iran. And so they said that caused Iran to back off. But Iranian sources were like, well, we're not going to do that right away, but we can be patient, etc., etc., etc. Now today, it's like full on alert. So I don't know. I was kind of maybe stalking along, so I kind of feel like I missed a trade there. Like, I think that was probably too fast for me to go, but I was kind of sitting here like, you know, maybe we could buy it because of that. Now I'm not too fond of the prices because like we got 4.5. I'm a little concerned that they might, you know, screw around with 4.5 a little bit. Those round numbers, you'll notice I pay more heed to those big round numbers than I do any kind of technical signal or price action nonsense that everybody's always talking about. Because there's actual data that suggests that there tends to be more liquidity at those even numbers. Okay, they're gonna keep going here, huh? I don't know. The volume on this is actually a little bit light. It looks like that you are getting some informed flows and the market makers are kind of jumping out of the way, but not that many informed speculators are actually getting in on it. It's somewhat of a gentle one. So if there actually was an attack, there would probably be room for this to like spike higher. But I don't think that we're going to get an attack today. Could be wrong, but I don't know if this is the one that we're actively going to see. Are we in 1 hour time frame? You had a short look at NQ? Yeah, well, I kind of feel like it's, yeah, for the short end, yes, we're already too late. But this, again, this is definitely because of that Iran headline. The exact headline that I'm seeing is Israel is bracing for a potential direct attack from Iran in days. It's kind of funny because I already saw that headline before here now. So it's kind of funny that that's causing them to jump. I don't know, but I kind of thought that all of the action that we saw before the news was that. So. Okay, here's 4.5. We are definitely seeing oil climb here. Maybe over the weekend, yeah. You know, we kind of have to game this out a little bit because, oh man, they are not stopping there. Already 5 ticks below it. Maybe I should have gone with it. So I got 2 thoughts on this, like 2 open questions. The first one is, if Iran does attack Israel, is that explicitly a flight to safety risk off event? Certainly, I think that could hurt the stock market because that's going to affect consumer sentiment and things like that. But I think that it would also be likely to increase inflation. So I'm thinking, if I'm playing this, well, interestingly enough, gold is not really moving on this one. So I was thinking maybe your flight to safety could be gold. I don't think so. So then probably the asset that you'd want to be in would be oil. Because what you could see is an oil-driven recession, essentially, is what I think is likely to come from something like that. Oil prices skyrocket, it really hammers the economy, etc., etc. But for the treasuries, that's not necessarily you buy it because that's inflation. That could actually make it more difficult, potentially, for the Federal Reserve to cut rates. And if they do cut rates, it won't be very much. But I'm not going to say that I am firmly on the side that treasuries, like, of course, you will see the flight to safety initial thing, but then maybe that retraces and inflation continues to be a problem and they continue to push them down, right? But then the other question is, would this hurt or help Joe Biden? Well, a conflict tends to increase support for the president. If the president really supported Israel, that would maybe assuage some concerns, but he's kind of got it on both sides, right? There's some people in the Democrat Party that are very adamant that we support Israel, and then there's another section of the Democrat Party is extremely upset about what's going on and would probably be even more upset about a war. So I'm not sure if it would hurt or help him. I also have to think that there might be a number of people that would really not want Donald Trump to be in charge in that kind of a situation. Not that I'm saying that he would do a terrible job or anything like that, but that they would think he's doing a terrible job and they just don't trust him with it. So I think all of those things kind of point towards it helping Joe Biden, except for that he's really going to get it from his left. And maybe people are just fed up with Joe and they don't trust him to prosecute a war either. CBS News, cited by Sky News Arabia, estimates in the United States indicate that an Iranian attack on Israel will occur today. That last little run that they had higher has retraced, though. Did they actually get 485 there? Wow. This is a dangerous market. There's gonna be lots of reward here because there's lots of risk. I think that I probably could have fairly safely taken advantage of that, although I'd have to be getting out by now, right? It wouldn't have been too, it would have been kind of a, wouldn't have been too big of one. Is this a short? Well, maybe. I do kind of see where the most likely thing to happen here is for them to retrace back to the open. Yeah, probably they retrace back to the open. But what if there is a strike like in the next 30 minutes or something? Like, what if a strike happens while we're here? This is just going to skyrocket out, and then you're short? Like, there's some real danger with this. So if I'm going to take a trade, I really want to be in and out quickly is what I'm thinking. This is not one where I get in a position and I'm going to try and let it ride all day. Nah, I think that if I take one, I'm just going to be in and out. I don't want to think about the slippage of that. Oh yeah. Yeah, if there's actually is a strike while we're here, there will probably be some insane slippage in some of these. I should note, by the way, that we are actually above 5,200 in ES, so not too much above it, but that's kind of been a key line over there. Forrest, how are you doing? Beds Collins is going to be on Bloomberg Television at the top of the hour. I didn't know that you were a software engineer. The modal text editor didn't make you wonder? I'm really enjoying Helix. I'm kind of wondering though, like all of the cool nerds are using NeoVim. Maybe I should just use NeoVim. I don't know. Speaking of software development, former Microsoft developer says Windows 11's performance is comically bad, even with a monster PC. If only Windows were as good as it once was. Oh, that's interesting because I kind of felt like that they made a couple of really important performance improvements. But maybe there are some larger problems. Just try searching for something using the search. Well, yeah, never try searching for something with Windows. Yes. You still trade on Windows 7? I switched over when they fixed the start bar, but there are some problems. Windows 11, I would say that that Windows 10 was the good one and Windows 11 was kind of a dud. So maybe we'll get Windows 12 and that one will be good. They're already talking about like phasing out or forcing people to get off Windows 10. Can you believe that? But like the whole thing is that like you got to realize Windows is kind of an afterthought for Microsoft now, right? The majority of their business comes from Azure, and then the next most profitable sector is Office. That was a big sell that crashed in there, by the way. 3,000 contracts hitting the bid. So yeah, I mean, it's not like they don't care about the operating system at all. It's still maybe like 10 or 20% of their profits, but it's not like where the focus is. And so I don't think that they're putting their best engineers and their best focus over there, right? Like I've been seeing some things with, on the Linux side that like Hyperland and stuff like that, these tiling window managers that look really cool. And you can do some pretty cool stuff with the command line. I'm kind of noticing among the tech people this trend to move back towards the command line among the kids. So like, I think that there's a lot of things that Microsoft could do in a Windows 12 to really do some cool things, but I don't know if they're going to do it. I was definitely wondering how you were so skilled you made stuff in NinjaTrader, experimented with a quantitative. Yep. I watched videos where you mentioned it. Yep. Well, what I do specifically is site reliability engineering, which is like keep the website up and keep it performing well. So I kind of feel like over the past few years that I've really gained like a much broader perspective. Really do a lot of things. I've been on Windows 11 for less than a year. Cut me a break, Mark. Yeah. I don't think that a Windows 12 is coming for a while. Like if a Windows 12 is coming, they're probably like thinking about what they want in it right now. And it's probably not going to be out for, there's probably be in development for like 2 or 3 years or something like that. It just makes me think about the things that I don't like about Windows right now. What my favorite thing about Windows is their new terminal application. They have a great terminal emulator. It has great key bindings. I can do anything that I want, including panels and everything within here. Okay, not the greatest shell. PowerShell is a great scripting language. Can do a lot of really useful things if you are like managing Windows servers, but it's not very good from a like I'm a user and I want to get things done from the command line perspective. Maybe that's the correct way for them to do it, because not that many people are going to use the command line, but I digress. Terminal is great. Shell is not great. But things that I hate that the default skin has rounded corners. So if I try and put, things in the corner or like windows next to each other, you can see the gaps between the windows. I hate that. I hate that all of the defaults are like ruin the start bar. The whole thing that I think Windows is good at is having tons of applications open and doing serious work. And they keep seeming to want to move towards this paradigm of people that aren't really actually using the operating system for real work. People that only open up one application at a time, I hate that. The search is pretty bad. What are your thoughts about crawling Twitter or another platform for sentiment? Could sentiment be? Yes, it is. I've seen numerous studies that strongly suggest that you can use sentiment on social media to predict order flow. I certainly use that to some extent in my own trading as well. The market has really been roiled by this inflation thing, man. It's just like, it's really funny how all of a sudden now everybody's concerned about inflation. Gold is just on a tear, etc., etc. They're chasing is really what it is. But yeah, so I can just kind of tell from the sentiment. And yeah, if you use quantitative methods, that is definitely beneficial. Now, the big caveat to that, though, is Twitter is not what it was. It just isn't. I am totally in support of what Elon Musk is trying to do. I don't think that he's perfect about it. I know Reddit is always complaining about actually Elon Musk censors just as much. I don't think that that's true. The only reason that they are bothered by him is that there are transgender activists on Twitter that are real trolls. And he, when they are doing their trolly things, he considers it a violation of the rules just as much as any other kind of harassment. I think they're actually making the right call there. But he has, much more than the previous Twitter at least, stood up for like free speech and being a platform where everybody can talk. So I totally support what they're doing over on Twitter, okay? But the left does not. The left does not. They hate it. They hate Elon Musk. And they are all on a different platform. They did leave. They didn't come back. If you go to Threads for Facebook's Threads, that's where a lot of the lefties went. You can't really do that kind of sentiment over there. They don't really have the same kind of like market discussion over there on Threads. So at least for now, the platform, at least for now, like what you can glean from that sentiment is not as great as it was like 4 years ago. I'm sure that one of these days, a new social network will emerge to displace Twitter and Facebook and Instagram and all of those. But I don't think we've seen it yet. Don't think we've seen it yet, and I don't think it's Threads. Wonder if one could crawl TikTok. Well, yeah, well, you probably could, because that would take a lot of resources though, right? Because you could absolutely have robots that like analyze the video and what the person says and analyze the comments and so forth. I do wonder, how do these kind of sentiment analysis sort of things deal with robots and astroturfing and that sort of thing? Because I'm seeing, especially on Reddit, I am seeing a lot of that lately. One thing that I saw yesterday that was kind of funny was there was this news story that a women's dancing group, their outfits were all American flag themed. And when they went to the competition, they were told that some people felt threatened by the American flag outfits, and so they did not allow them to compete because they were wearing American flag outfits. Pretty crazy story. You're going to see that one today. Like that's the rage bait for the conservatives today. Okay. And they should probably milk it for all it's worth, because it's totally crazy to me that the left has become anti-flag. They're threatened by people that love the flag. Hey, look, I have a flag in the background there for a reason, right? But when that came out and there was threads in like the local area about it, everybody's like, this is a fake story, it's not true. They were all trying to downvote it and suppress it and whatever. But then conservative media picked up on it and it kind of blew up. So like there are absolutely people on the internet that try to control the narrative. And I think that in many, many cases, they are successful. And it wouldn't surprise me in the least bit to find out that certain companies, for instance, are paying people to try and promote investing in that stock online, for instance. So that might make sentiment analysis a little bit more difficult to pull off. We were getting the Federal Reserve speaker saying that they didn't like the CPI number, but that it doesn't change their expectation for inflation to slowly come back down to target. Okay. That is Collins. Yeah. So what I see going on in the market right now is the market was kind of pricing 3 rate cuts. The Federal Reserve kind of comes in and wants 3 rate cuts. And I think, I don't think that they're like explicitly trying to influence the election, but I do think that these people have an opinion. I don't think that they like Donald Trump. And so they're going to have a biased perspective. And so their bias would be that they would like to see inflation come back down and be able to cut rates that would help Joe Biden. And what I see happening is that the market is picking up on this and is now all of a sudden saying, you know what, we don't trust you to protect us from inflation. And that is why gold is like on such a tear. So here, it's very curious to me, or let's not say curious, but I think it's important to note that even after that inflation report, we have some members of the Federal Reserve, like Collins, desperately trying to downplay it. I don't think that there's a short-term trade in that for us yet, but, you know, that kind of, I think, is a buy gold, buy oil sort of a thing. The S&P 500 taking another dive here. The treasuries are kind of still holding where they were. Wonder if LinkedIn would be a good place to crawl? That might be. Yeah, actually might have a good point. Although, at least on my LinkedIn, I don't actually see a lot of market analysis or market sentiment. You're much more likely to see like discussion of quant stuff and so forth. Was on LinkedIn yesterday, and oh my gosh. Even though I have or at least I'm pretty sure I have myself set up to be like, don't contact me, I still get messages and stuff. It's just wild to me, but there was a lot of really good stuff on LinkedIn yesterday. Oh, you know what I should tell you about? Where was it? Yes. Okay, so there's this guy. I've kind of like, I didn't want to say his name because I didn't feel like he was a public figure. So I didn't want like everybody to go and start spamming him on LinkedIn. But I absolutely love the content that this guy posts on LinkedIn, and he's starting to become a little bit more public. So I think we can talk about him now, okay? So his name is Martijn Braun. He's from the Netherlands, and he was like a senior slash I think he was management to some degree, but basically he was a senior trader at Cargill, which is the largest commodities trading house out there. Okay, so like what he does is very relevant to what the sorts of things that we want to know, because Cargill is to some extent doing the same sorts of things that we're doing. They are kind of more in the realm of speculation. Of course, because they're so big, they're able to do other things like actually hold the commodity, hedge, right? The strategies available to them are larger. But they have the same kind of interest in the markets that we do, that they want to know what's going on in that particular instrument and so on and so forth. And so I find that this guy just provides such great insight on trading itself. So recently, he decided to retire from Cargill and do some of his own things. He's been doing consulting and stuff like that. And he decided to make a podcast. So he has a podcast. I haven't been able to listen to any of the episodes, but I'm almost certain that they'll all be really great. So his podcast is called Strong Source. So some of you guys were asking about like Chat with Traders, because Chat with Traders was just, I'm a guy that's trading, I'm having trouble, I'm going to interview traders that were successful or whatever. Okay. So I kind of found that Chat with Traders was hit or miss. Sometimes you got people that knew what they were talking about, and sometimes you got people that were complete charlatans. And I don't know if the host knew enough to be able to really discern and get the right people for you and things like that. But this guy, Martin, and his I don't know who this other guy is, but they are going and getting like their people that they worked with, like at the big commodity houses and things like that, to interview. So I think this is totally worth a listen. Each one is about 50 minutes. There's already 7 episodes, so there's 7 hours of content for you to consume. That's one that I think is worth listening to. Another thing that I really like about this guy is that he has the same kind of hate for the charlatans and influencers out there that I do. Yeah, I'm gonna say I'm not gonna say necessarily his approach to trading is similar to ours, as much as his interest is in the same, more of the same things, right? He's going to be interested in what is the supply and demand in that market? What are the news that, like, what's going on in that market, rather than like technical analysis. Like, he understands technical analysis is mostly nonsense. Certainly intraday technical analysis. Maybe I should just present it as that. Maybe my theory is intraday technical analysis is nonsense. That's my theory. Yeah, well, you were the one that was asking about Chat with Traders, right? So when I saw that, I was like, oh, definitely want to point that one out. Chat with Traders is fall. I thought that they quit. Are they on Spotify? That's a DAO. Oh, that must be. Oh, maybe it was just somebody else took it over. Oh, I didn't know that Gary Norton was on there with them. That's cool. Oh, okay. So I thought that when Aaron quit, that was just going to be the end of it. But I guess somebody else came along and took it over. Yeah, I don't know. This is still the problem, is that like I kind of think that the premise of the show was a little bit flawed, to be honest with you. Because I think that the premise of the show was let's go find people that have made a ton of money from trading in the past and talk to them. And I tell you, there are a lot of people that made a ton of money from trading and are just completely have no clue. So I give you an example of one that I believe. There's this documentary about pit trading in general. Did we just kill the music because of me doing that? Oh, I closed the window and did that kill it? There we go. anyways, so they talk about the pit traders at the CME a lot, and the options traders a lot. It's a CNBC documentary. Okay. And there's this guy that they talk to. And this guy, when they interview him, is completely drunk, like slurring his speech and all of this stuff. My favorite part of the documentary is he's like, people don't understand, man. Like, if you're down on your position, add more. And if you're up, just let it ride. Just let it ride. Right? So, yeah, exactly. Yeah. Some of you guys that watch that documentary know exactly who I'm talking about, right? And then at the end of or towards the end of the documentary, they ask him like, so like, why did you stop trading then? Right? And he's like, get out. So I don't actually know what happened to him, but here's my guess. He was a degenerate gambler. He was taking on lots of risk. And the way that he was making money was from taking on risk. And he made a ton of money. And he was lucky enough to be able to save some of it. But ultimately, he blew an account and had to just live with what he had after that. That's what I think happened. So I don't think that you would actually learn a whole lot about like the market and like the behavior of the market and what sort of things tend to move things and become a better trader from necessarily talking to him, because his success came from being a degenerate gambler. Right. And that's my issue, is that if you go and you find retail traders and you find all of the retail traders that have had success in trading in the past year or whatever, I'm going to bet that 90% of them, that their success was actually luck, and that that you can't actually learn a whole lot from them. You're more likely to get lucky than you are to make money in the markets from skill. That's how hard it is. What is your take on the drills that Jigsaw is promoting for order flow? Have they put out content recently about the drills? Well, I don't know what they're doing now, but what I would say is that the drills that Jigsaw tends to talk about are useful, are very useful. You're just starting out, absolutely something that I would do. So I don't know, what content they might be promoting right now, but just some things that I would do if you're beginning and you're just starting out with the DOM. With the sim account, come in here and just try and catch the edge. Try and find a spot where you hit into it just as it's about to go, and then you take a tick. You might not be net profitable with it. Don't worry about that. The key thing is we're practicing hitting your order in with the flow as it's crossing. Just focus on that. Then you can do another one where you're doing an alligator. Like when it ticks up, put the contract in, try to get at the front of the queue, and then, if it keeps going, just leave it, and wait for it to come back. Placing alligators. Another one that you can do is just like, you're always in the market. So every time you take a trade, right, it goes up. And then if I want to get out of it, I can't just get out of it. I have to go short. Right. And practice being in the market all the time. Those are all useful things when you're just starting out. And you won't necessarily make money from doing those things, but they really teach you about like entering your orders and kind of building some of those skills that you need to be able to really read the order flow. Yep, cut and reverse and the one tick drill. Yep, I find them very useful as a beginner. The big caveat is I highly doubt that anybody is going to be very successful with solely doing either of those two methods, but they do teach you important things. Your boy Fat Cat, I bet. it kind of comes back to like we got to go back to like the larger framework that we have, right? The market is incredibly complicated. There's a lot of randomness. You're more likely to be successful from the trading by being lucky than from actually having skill. And so if we want to develop skill, we kind of have to approach it a little bit differently than we would other markets. One of the things that we have to do is that we have to rely on empirical data. We have to, be able to take really large pieces of data to analyze and find real true inefficiencies or tendencies in the flows. And that usually requires several years worth of data. It's not something that you as a person can really do just sitting there and watching it. Okay. But if you have the empirical information, then you can kind of, keep that in the back of your mind and interpret the data that you have coming in using that. Then you're able to learn something a lot more from it, right? So then it becomes a training sort of a thing. We got to train those parts of our brain, and it takes a long time. I don't think that I really understood what I was looking at with the order flow for like 1 or 2 years of watching it. So, and that's just because it takes some time for your brain to adjust. And so that's why things like those drills, those tick drills, are so useful, because it's helping you train those parts of your brain. Okay. But I personally think that most of the people that you got out there, that they don't have the empirical information to start with. And so, when you don't have the empirical information, then what do you focus on? You just focus on like what's in front of you. And that's why you get all of these people that they're hyper focused on price action, even though there's no evidence that any of that stuff works. I think that, order flow is better because there is some real information there. But I've found that people have a tendency to turn order flow into another level of technical analysis. And it just doesn't work that way. You need to have something that's going to predict the orders. Okay. And then the sorts of aberrations and things that you see in the order flow might be beneficial to you. So, this is also why you get a lot of people that they're focused entirely on psychology, right? For most, it's not fun to read academic papers, and people tend to gravitate to the most absurd things sometimes instead of learning for real. Well, that's why you got me, right? Because I enjoy reading the academic papers, and I think that I've gotten pretty good at being able to digest it into something that can actually explain where it could be useful for you without you having to get into all of the details of the math. It's probably never going to be a game changer. I'm always going to talk like it's a game changer. Like with this momentum video, like I say in that, is like, understanding how real momentum strategy works might be the game changer that you're looking for. Well, maybe it is. Maybe for some people, seeing how a real momentum strategy works and understanding where they've kind of been wrong about momentum might like really transform their trading and really put them on a different path. I hope. But, the reality is that I doubt there's anything I could teach anybody that would be like the real game changer between them making nothing and them making millions of dollars, right? It's always going to be super teeny tiny little edges here and there. And maybe if you get lucky or, the right opportunity comes along and you're able to take advantage of all of that, right? And that's the key is learn the one thing and learn to do it well and hope that the right opportunity comes. Have you read the order flow, imbalance, and high frequency trading white paper, Matteo Pecciolari? I don't think I have, although that name does sound vaguely familiar. Somebody mentions like an actual study. I've got to look at that, right? Do you got the name of a specific paper? Actually, let's do this. Let's go to scholar.google.com and put his name in there. And does he show up there? No. The name of the paper is Order Flow Imbalance in High Frequency Trading. Okay. The first thing that I get there is a, yeah, maybe you can drop it into Discord. How do you link? Oh, okay. So you need the role. Okay, now you should be able to do it. There will be like a little plus button to the left of the chat section, and you pick it, and it should let you post it. You just needed to be given permissions first. Your video, why TA fails price inelasticity changes everything is amazing. So oh man, yeah. Are you like a are you like a infiltrator that is here to just say everything that will make me feel good so that you can get close to me and take advantage or something? Because I feel like you're saying everything that I want to hear, man. Is that your wife? Who are you talking about? Why are you there? Imbalance white paper. I don't think I have. Oh. Where do I put these? Oh, is that my wife? My wife would never do something like that. Oh man. My wife is very sweet, but she's quite a passive person, let's say. She's not the type that will come up with some sort of clever scheme to make me feel good. Part of it, you gotta understand the living situation at home right now. Okay, like I think we're doing pretty good, but like those toddlers are super stressful. Okay, and her whole day is dealing with two toddlers that could kill each other if you look away for more than a second. So she doesn't have a whole lot of time to think about, It kind of, a thing I've found with women is to really get the most out of a woman, they really need to be relaxed. They do not respond to stress the way that men do. At least my wife doesn't. When a woman is stressed, they kind of clam up and they're not as outgoing, and you just don't get as much from them. Versus, a guy, they can go from being really, really stressed to you wouldn't even notice it right away, right? So, kids, toddlers are tough, guys. And to be honest, another thing, like if all my kids were like older than 12, I think I would probably be more willing to take on risk. But right now, it's like I know that takes so much of our emotional effort and everything. I'm a little bit weary about adding too much stress onto that with trading, like I did before they were born. Are you planning on making more videos on price inelasticity and maybe also information inefficiencies? Well, so I think that from going forward, that if I make a video of that type, it would be because of some paper that I have recently discovered or has recently been put out, right? Because I feel like the research that we have does a pretty good job of answering the major questions that we have about the markets, and that I was able to turn those into videos very effectively, especially that order flow video series. I feel like you watch the order flow video series, that you have a pretty accurate model of the markets to use that will give you a chance at finding an edge in the market. But if I find a study that that's new, then I'm definitely gonna, I can make videos about those. I was thinking, so I finished the rough cut of my video on momentum. I don't know if I'll actually put it out Monday because I'm gonna be pretty busy this weekend with other things. Just got home from work. Why the downs? Because they're concerned that Iran is gonna attack Israel today. Anyways, so I'm gonna add like B-roll and all of that sort of stuff to keep it visually interesting. That's what I got to do on that video, and that might take me another week. But now I'm thinking about like the next videos. I do have a video for the chair, and I kind of feel like I should make something about the chair. I like the chair, and I've had success with that sort of stuff, and like the gear is an important part of the trading, and because of my high affinity to technology, being a site reliability engineer and stuff like that, that's actually one of the places where I can have like some of the greatest insights for people is just their gear and their computer setup. So I do want to do that one too. I'm a little torn if I'm going to do that one next or if I'm going to do this next one. But I was thinking about it, hey, you know what? You've been ruminating about this particular subject. Why aren't you making videos about that? So the subject that I've been ruminating about is index funds. The inefficiencies, positives and negatives that come from passive investing taking over the market. Because now, I don't really feel like, I feel like we've kind of broken the market. I don't feel that the market really values good companies anymore. They just try and put the money in everything, and that's enabling all sorts of bad behavior from companies. So I think I should make a video like that. I think I should make a video that's titled like, "Are Index Funds Evil?" or something like that. Some real eye-catching. Lots of people have opinions about this, right? I think that could be a really good video. So that's kind of what I got on my plate. Then at some point, probably after we finish the desk, I'll make a video about my rack mount setup and everything that I'm doing there. That one's kind of more for me. I don't know if people will be that interested in it. Then at that point, it will be like, well, maybe by that point, we'll have some other big ideas that we're going with, new research to work with. If we don't, then the videos that I would make would probably be more like, how much money do you need to day trade or something like that? The sorts of things that we just know tend to do well on YouTube overall. Because it's been a couple of years. I haven't really made videos like that since before 2020. So, okay, I'm distracting myself here. Where is that file that I just downloaded? Imbalance white paper. From 2020? Oh, maybe you guys have brought this up to me before. This thesis aims to provide a complete description of the relationships between order flow, trading volume, and market returns. Firstly, it was described the trading process, and it was done a review of the market microstructure literature in order to explain the different approaches to the empirical investigations. Thereafter, there are illustrated the properties of the variables and the statistical methods, such as quantile regression, multiple regression, that enable us to highlight many aspects of interconnectedness among these variables. From the outcome of these empirical studies was possible to build a trading strategy and consequently introduce some improvements. I don't think the English is this guy's first language. Oh, I have seen this before. This one is like, okay, they go through all of the studies, and then, so this is really more like proof that I understand the current literature out there. We can conclude that it is possible to develop an alpha generating strategy exploiting the order flow that comes to the market. I will need to read that on my own time, I think. Let me come back over here. Let's see, here was index funds. What was this guy's name? Mateo. Seems like the treasuries are ready to turn around. What, to move higher again? Or you mean like sell to the bottom of the range? Yeah, curious on your thoughts from it. Well, I'm going to guess that he's going to be talking about the same kinds of concepts that we're already familiar with. But he sounds like he has a practical application of it here. So maybe we could get some ideas on how to apply things from that paper. Well, so I'm not sure if it goes higher without some more stimulus. Yeah. I think so too. If we come back over to here, so the momentum has been blunted. So I think that that's just no longer a flow. We have University of Michigan sentiment and inflation expectations at the top of the hour. We still have some Fed speakers later today, fears of an Iranian strike, and then the flows on Friday tend to die early. So I think that barring any Iranian strike, that the flows are likely to be slightly negative. It's like slightly negative with high risk of long order flows coming in. So if we're going to go short, have a good stop, right? Because that could flip out on you real quickly. But it is in a bit of a liquidity hole, and we do have fairly significant economic news in about 25 minutes. So it's probably best for me at the moment to just sit on it and wait for that, for those headlines. Because, you know, if 1 and 5 year inflation expectations come out higher than expected, then the market is probably going to see another pretty good flush. So, by the way, that paper, you should post that. I mean, you can leave it there in the main channel, but you should post that in the right channel. There's under quantitative finance, there's a room called research papers. You should post it there. Oh, I missed that comment. Your index funds video sounds very interesting. Yeah. I think that video will take a little bit of work because there's so much to say about that. And it's going to be difficult to organize my thoughts. So I've been yapping for about an hour here now. Let's come back and check Twitter and so forth, see if there's any interesting stuff. Well, there's another little drop. I guess you should have just gone short there. When you say retail traders are most likely to find success among higher time frames, what time frames are you talking about specifically? Daily and hourly. Like if you swing trade the S&P 500 and only buy, that's probably going to be a profitable strategy. As long as you're holding the trades for like, you know, overnight, several days. Most people will come out of that and have made some money. So the truth is the reason most retail traders do day trading is because they don't need as much money for it, right? But if you have like $50,000 and you can, you know, afford to hold an ES contract for a whole week, I think you should do that. I'm not willing to take that kind of risk at the moment, but I'm working towards I want to take that amount of risk. Brannigan Barrett says selling into rallies is now the strategy to adopt, given we have broken below 6-month support. That he's talking about the euro. Bonds are rallying, led by back-end gold rallying, new records high, dollar rallying to new yearly highs, VIX at yearly highs. This is not an environment typically conducive to buying risk assets. How the market is trading at these prices is beyond me. Okay, yeah, the stock market yesterday was a little weird. Like that late day rally, and especially in the treasuries, was really weirded me out. Is there a maximum length you can hold? Well, you will have to roll it over at some point, right? Because each contract has an expiration date. So for these ones, these are June. So, you know, if I was holding a position in the treasuries 3 days before the end of the month on May, so if we come over here to May, so basically May 28th, May 29th, I would want to close my position in this future and roll it over to the September future, which I think is Q, right? I had them all memorized, and now I don't feel like I've already forgotten it. Bloomberg now has a story about Israel bracing for potential direct attack. I don't know, there was like that downside that they had there that was really brief. I didn't really see very strong order flow following it. I'm still seeing buying in the 5-year. Seeing buying in the 5-year, even though the yield curve is not turning steeper. So I'm a little bit weary about being short here, to be honest with you. Let's see here. What's Mohammed El Arian have to say? Gold prices are up again this morning, almost 1%, as more investors view it as a better hedge against geopolitical risks than government bonds due to U.S. inflation concerns. Gold is also seeing support from central banks, some of whom are motivated by more than just inflation and geopolitics. Elsewhere in the markets, oil prices are up around 1% on the back of Iran-Israel tensions. Oh, I thought I was going to give more commentary than that. I could have told you that one. Wonder if you bought and did what you needed to at every contract rollover. If one, yeah, you would, totally would. In ES, you'd make a ton, right? It would basically just be your own leveraged S&P 500 fund. So you could make a ton. The problem is that when you get a drawdown, right, you got to realize that like drawdowns in the S&P 500 can be like 50% sometimes. So, you know, what would happen if as soon as you started that, a bear market began, right? Then you would probably run out of margin and go bust. So there is risk to it. But it's not a terrible idea to just have a position long in the futures forever. Yes. UB is actually catching up to ZB. ZB and are much more closer than at the top. CF still fills up even though it corrected much more than the rest. Yeah. Well, so look at the, you know, the spread isn't really changing. But the order flow, flat, buying. So when that's happening, when I see that big of a difference between them, I would be thinking, oh, there must be something going on in the spread. But there's not anything going on in the spread. There's not really a whole lot going on in the currencies either. So it could be that somebody is placing a bet of some sort that the treasuries are going to go higher and they want to do it on the short end. But that's why, okay, if somebody is making a bet and it's long, that makes me a little bit weary about, oh, this is going to go down to here sort of a thing, right? Doing it on MES would definitely be more realistic, yeah. I guess the point is, so when you're thinking about investments, the way that you want to think about it is like a risk-adjusted return. Like the most simple metric and the one that you'll see most commonly is a Sharpe ratio, right? So what are you making for each unit of risk that you're taking on? And so when you switch from an index fund to just holding the future forever, that does not change your Sharpe ratio, right? You're just adding more leverage. So your profits and your losses change by the same amount. And so the Sharpe ratio is not different. So it's kind of like, what's the point of doing that necessarily? More leverage, more chance of you blowing it. I don't know. I think there's something that's to be said, like, okay, so price action methods we know don't work very well. There's no empirical evidence supporting them, and the majority of the retail traders that we watch using those methods eventually go bust. Now, the reason that some of those methods are attractive to retail traders is because they do see people making money with them, and you can make money from some of these things in the short term. And it's not uncommon if you're taking on a lot of risk to not go bust for like 2 years. So there is a perspective, I guess you could say, where you could say, well, hey, I would rather make money and be big for 2 years and then go bust than to have never had that success at all. Okay, I can understand that. That to me is not interesting. To me, there's plenty of things that I could do in the market that would be likely to make me money. You know, I can just put my money in an index fund and I'm going to make like 7% per year, generally speaking. But it's not fun. I'll do that for my retirement, but if I have extra money, I'm going to put it into to taking risks and to learning more about the market. Okay, so there's a little bit of a rise to 20 now. Right at that 4.5 again. I was kind of thinking about 4.51 wouldn't be a terrible price if we didn't have news at the top of the hour, right? But let's see what it does. I'm kind of betting on, am I betting on it? I think I kind of am. I'm betting on the treasury market being basically at 18 before the news comes. If I'm wrong, there might be somebody thinks they know what the number is going to be and is placing a bet before it. So let's see. Why not deal with MES or just SPX calls way out? Yeah. I like that one a little bit more. I like the, okay, we're having like a deep reset, like we're in a recession. Okay, if we have a full-on recession after all of this, whichever way it happens, oil price spike takes us into a recession, inflation takes us into a recession, that we have the soft landing, but kind of stumble after the soft landing. Anyways, if we have a recession here, I would like, if I have the cash at the time, part of the problem, the reason you get a recession, like the reason you get market bottoms is not because it's like nobody's paying attention and they don't think that it's ever going to recover or anything like that. Everybody knows to buy the dip. It's that they just don't have the money, right? So if I have the money at the time, I would like to get into leaps. I would like to buy S&P leaps. Buy S&P leap calls, rather. That sounds like an awesome trade to me. Right now, though, I think the thing that interests me the most, to do with more capital is to just buy individual stocks. I would like to own more companies. It bothers me that everything's in index funds, and I want to be one of the people that are, taking ownership of individual companies. I don't necessarily think that anything super crazy will come from it or anything, but it's something I enjoy it. I feel like I should be doing more with that. Ooh, we got 10 minutes. U.S. restricts diplomats' travel in Israel, bracing for Iran attack by week's end. Futures tumble on disappointing JP Morgan earnings and surging geopolitical. Oh, I didn't even realize that the bad bank earnings might be affecting the S&P 500. Let's put that on there. JP Morgan earnings bad. Would you ever make more long-term investing content? Yeah. I don't know. I feel like that content is a little bit more difficult to make, though. If you really want long-term investing content, I would read One Up on Wall Street by Peter Lynch. I really don't think that I could do that content justice. There's just so much information in that book. Long-term investing is really complicated. There's so many things to look at, and like doing empirical. So like if I come in and I'm like, okay, I want to just use fundamentals and decide which stocks I'm going to buy in my portfolio just based on fundamentals, like that's probably something that I could probably spend a lifetime studying. And I don't have a whole lot of empirical information to suggest that like this metric is better than this one and that sort of a thing. So like I think it would be hard for me to make content about that. But we can talk about some of the things like like with index funds. I do want to bring up the whole like, okay, like if you're in the US, first thing you want to do is get your employer's 401k match and max out your IRA. You can contribute money into your 529 accounts, and then if you don't use it for school, it goes back into your Roth IRA. That's super cool. Anyways. I should minimize this. We still got 5 minutes. They did take a few ticks back. Hearing things I'm gonna do squawk, but nothing too important. If you look at historical yen and assume the Plaza Accord is a relic of the past, man, they could take the yen to 250, 200, and China would declare war as it would decimate the Chinese economy. Huh. Okay. I don't know what that means, but curious one. Sounds like Congress is going to try and push the FISA bill through again today. You got to go? Oh, you're gonna leave just before the fun starts? All right, well, yeah, you have a good weekend. I'll see you Monday. Got 2 minutes here. Okay, so I'm starting to see the liquidity pull. I'm actually seeing a lot of little bits of activity on the DOM here too. That's kind of curious. But they're treating this like an A tier release, I would say. Thinned out pretty, yeah, it really did. I mean, like it really thinned out. That's almost like S tier levels of thinning. That's more than I'd say the University of Michigan usually is. Okay, so I am seeing 1 and 5 year inflation expectations being slightly higher than expected, but the market's not reacting too strongly to it yet. Okay. It actually looks like it's, well, they fell a little bit and then came back up. So we got 3% versus 2.8 for 5 year, and we got 3.1 versus 2.9 for 1 year. So we got spot 2 higher on both of them. But then sentiment was lower than anticipated. It's 77 spot 9 versus 79. So the market doesn't seem to know what to do with that. It's kind of interesting to have seen the market pull and give so much heed to that particular news event and then not do anything with it. But I don't know. It is what it is. So remember, it is Friday. So the flows can die out really quickly on us. But I do think that could give us a little bit more short flow than we've seen. So I'm gonna tough it out for a little bit longer. The bids feel more funky than the offers. Well, the liquidity has not completely come back yet, has it? That's definitely a thing. Oh, that did not do what I expected it to do. That was a misclick. I was gonna put a stop out there, but I still had it set to limit and it took me out. That's okay because I saved myself a few ticks there by that misclick, so that's okay. I don't know. It wasn't really working anyways. I'm kind of thinking that the setup that I was looking for there that was going to push things lower is maybe not going to come. The issue is Okay, I am hearing rumors about things like on Twitter that like maybe okay, actually let me just go back. One unconfirmed source on Twitter is saying that they are getting aircraft incursion alerts. I was thinking about taking that, but then I was like, oh, and look at them go. I don't know about that. I'm really tempted to fade that, but I know that that would be stupid. I was wondering if we were going to get enough flow and then we were going to get secondary, you know, flows coming out of that, but it didn't. It looked like the people bought it up on that, and now they're all kind of stuck and they're just kind of sitting on it. Yeah, hostile aircraft intrusion alerts sounding in northern Israel, says Israel War Room on Twitter. That's one unconfirmed report on Twitter. Need to be faster. Maybe I should be doing some of the one take drills because I haven't been able to catch like the really fast moves lately. The liquidity looks a little healthier now, surprisingly. And those offers look awfully scared. Some clicky click. Those are just asks pulling. Yeah, I kind of do wonder if you might see some shorts peaking, but it's not quite happening yet. They're still kind of toying with the 22 half. So a bit of volume went into 22 half. It didn't clear. So that was me trying to catch. I clicked in there trying to catch the edge a little bit, but it didn't catch the edge. There they tried to clear it again and more offers appeared. Okay, now the S&P 500 is selling off. You know what? This is happening because of like literally one unconfirmed Twitter account. it kind of sounds like a relatively serious account. I do think there is a good possibility that it may just be starting. Okay. Wait, was that 49.25? Did that just happen? I think it did. Wow. Oh, no, wait. That was from before. That was from before. Late to the party today? Yeah, what was... Okay, so Obsidian. We did have the University of Michigan sentiment, which did seem a little hawkish. The inflation expectations were higher than expected, and we saw a little bit of a knee-jerk reaction lower. But then we started getting more headlines on Twitter about... so specifically, the Twitter account Israel War Room is tweeting a hostile aircraft intrusion alerts sounding in northern Israel. So the market has... The treasuries have been trading up here because we're getting hints that maybe Iran is attacking right now. Well, there's a lot of volume coming through here. Look at that. 14,000 12,000 contracts coming through between the bid and the offer. There's icebergs on both sides. Liquidity here looks healthier. So that is something to make note of, that like when we were down here, the liquidity was still a little light. Then we moved up here, and both the bids and offers seem to be a little bit more willing to put stuff on. So I think that there may be some larger players may have started to come into this market and do stuff as well, which is kind of odd and unusual. Okay, so they traded through that. Wow, 7,000 contracts. They just, once it was ready to go, they just burned right through that. Yeah, okay, White House says they will not comment on the reports. If that is not, okay, wow. I may be like completely off here, but if that was false, I think that the White House would be shooting it down. So I think that was maybe a inadvertent admission that something is happening right now. Okay, so they haven't busted through 24, and there is a big order up there, but I think that they have the the oomph to get through it. My position there is looking better. I did have only 2 ticks against me, so it wasn't too bad. That way of edging comment from the White House will put more. I think so. The only issue is you know, is the volume really there? Okay, the White House still deems the threat from Iran to be real and credible. White House will not comment on reports of imminent Iran attack on Israel. It is a viable threat. The S&P 500 is not happy. They are kind of sitting on the edge there now. The low from before the open was 51.94.25. Obsidian futures, they were expecting an attack on Monday. That's correct. We were all on edge last Friday. This one feels way more real, though. I really think that the Israeli reporting on this was correct. I don't think that we get a very good picture of what's going on in this situation because, you know, this is like tactical information. So it's to their benefit to not let their enemies know what they're doing and what their thinking is and so forth, right? But the reporting that we got was that Iran was going to attack, but because the United States said that they would respond with Israel if anything happened, caused the Iranians to go, okay, maybe let's think this through a little bit. But it sounds to me like all that did was make the Iranians kind of like wait a little bit and plan more. Okay, I didn't hear that full news squawk, but there was just another report coming out from Al Jazeera citing with the Israeli news. Okay, so there they did bust through. Okay, actually, wow. So there was a 5K order at 24, and they only traded 34.61. I'm getting a slight hint. There is a very, very slight. It's only been like 1 or 2 ticks, but there's been a very, very slight flattening in this. So that could help us. Gold parable. Oh wow, yeah, gold really took off there. And oil is starting to push its highs here again as well. This could be a big one, guys. Okay, White House is talking other stuff now, but they're talking about like China and stuff now, so yeah. I think that there could be a lot more to this. The question is just how much heat is that they're going to be before it comes, you know? Oh boy, I forgot that I still follow Andrew Tate on Twitter. He doesn't tweet very often, but judge's decision postponed until April 26th. I tell you what, I don't think I've ever seen somebody rise to prominence so quickly and then be swiftly forgotten about as quickly as Andrew Tate. And I'm sure that his fans would probably say, well, like the deep state moved against him and yada yada. Well, maybe that's true. But you know what? I kind of think that Tate was his own worst enemy in this situation. Like, a lot of the people that would be prone to support Tate are going to be strong Christians, and then he became Muslim. That's going to hurt you. And I do think, based on, you know, the things that he said in the past and everything, that what he was doing was, if not sex trafficking, awfully shady. So, man, okay, so after that push, and it was a slow and steady but strong push and a decent amount of volume, of about 10,000 contracts long, it looks like some of the longs are giving up. You traded 4773 on the way back too. That's interesting. So that kind of suggests to me that it's not over. It could go either way from here still. I'm still kind of betting on further headlines though. I did agree with some of the things he said. There was a good valid point for men to strive for greatness, but yes, I as a Christian man do not agree with the direction he's gone, along with his slander of Christianity. Yeah. Well, I think the thing is that I see, and that I think he was taking advantage of, is that the discussion in our society has become very tilted, and it's all about, you know, the struggles of certain groups of people, and women are one of the ones that are talked about the most. And honestly, I think that it is kind of politics. Like, they want the female vote, and that's a voting block that the left like really dominates and wants to really solidify. And I think that that's why we talk about women's issues so much, and the guys feel ignored, because men are facing issues unique to our day in a way that other groups are not. So he was one of the only people out there saying like, hey, look, like, this is kind of a problem. I think that's why he gained so much prominence so quickly. But yeah, it's also was kind of like social media manipulation and things like that. And so, you know, live by social media, die by social media, right? If this news was real, why didn't CL move with this reporting? That's actually a really good question. My guess, so one theory would be that your intuition there is correct, and that the oil market is skeptical of that headline and is not going along with it. But I think that another possibility is that oil had already moved so much on this, whereas the treasury market in particular really hadn't. Like, the treasury market had come back quite a bit. Okay, so there was a tick or two down. I'm still not seeing a strong imbalance in flow. Security consultations begin with the participation of Netanyahu, Gallant, Gantz, and Eisenstadt to discuss the possibilities of an Iranian response. Al Jazeera citing Israeli Channel 12 was the one that I had heard a little bit earlier that I didn't quite catch all of. So that's a headline that kind of suggests that it's not happening like right now. This FISA bill in Congress today is probably going to be a bitter fight. If the conservatives are able to shoot it down again, that's going to be a huge deal. Yeah, I don't like the way that my chart looks all of a sudden. Ooh, we did get a sell. That last bar was a sell. Okay, that could be enough to get me out. It's completely paused here though. Okay, down tick. Down tick, recover, decent bid, but kind of looks like they might be able to go back and forth across that price a few times now. Yeah. Look at that. Although I think that the sellers seem a little bit more... Seems like the offer is a little bit more aggressive. See, I really liked the report of import prices this morning, so I believe we are moving more off of that at the moment. You really? Do you think so? Okay. I did not notice at the time, like at the 6:30, there wasn't really a big move. I think that the move that we saw after that was Israel. The thing that's confusing about this particular setup here is that we keep getting like more and more headlines and like repeat headlines. So it's like it'll come out on one source and the market will react, and it'll come out on another source and the market will react. So that's making lining up like specific news headlines and news, difficult to do. This latest move since the top of the hour, though, is definitely because of that Twitter report. And it does kind of look like the selling has kind of run into a wall here, but that's just kind of like forming a base. I don't know if that's really going to be enough to push it back up there on their highs. And I would also say that while there was a lot of volume up there at the top, that it was not quite such a spectacular like stop run higher as I was hoping for. So the market still seems a little bit reserved now after that move. That was a good bit at 21.5. Okay, some people on Twitter are saying now that that earlier headline was a false alarm. What time is it? 8:25? Can they get through this offer at 22? It seems like they're having a hard time with it. But you know what? There's been multiple places throughout here where it's taken 5,000 or more contracts to get through, so. Well, they went bid briefly, but they weren't able to hold it. I'm gonna bail there. So, I was really starting to get like something's going on, but I do kind of also think that we would have gotten more at this point if that was real. And I am seeing people suggest that it was a false alarm. So, and we've formed a liquidity hole here as well. So that kind of looks to me like a reasonably safe place to get out. I only lost $4 on that one. This is fine. We can still wait. If something happens, we'll hear it. We can probably jump on it if it will move way further than that. If price... Okay. So I've actually done study on that sort of thing, and I found weird things about it. I did not find like an explicit edge to it, but the thing that I found that was really curious was that it almost seems like they fight over it. Like, when you're in that situation, will they close that? Will they close above the previous candle low and all of that? you see order flow both ways trying to push it at the last second to try and get it above or below that level. Like they fight over it. So maybe it's a thing. I don't know. But that's not empirical. That, you know, that's kind of I would kind of consider that more as like an anecdotal thing. It's not like empirical evidence that there's some edge there, right? So they did test below this range, then came back into it. Okay, so Al Jazeera is reporting from speaking to a U.S. official that reports of Iran doing a strike today are not confirmed. So that's like the U.S. has suspicions that's happening, but from their sources, they haven't been able to confirm that like a strike is actually imminent. And I do think now it is starting to become more clear now that that headline that originally got me into that trade did end up being a dud. I got too excited on that one. So I'm glad I was able to limit the damage though. It's been good. I'm on like, that's like a 3 trade losing streak, but like they were all super tiny losses. So that one actually, oh well, it was half and half. I was 8 favorable and 7 against. So it's not too bad. Setting up for Sunday Open Madness if news comes out after the close. Yeah. Or it could be like last weekend and nothing happens. Yeah, well, you know, so going back to the oil thing, Obsidian, I don't know if I can actually read anything into that. It's, for one thing, oil is still up there. Okay. If there was, so like the thing is, if there was like if the next headline that we got was explosions in Israel, right? What would oil actually do? Do you think that oil would just like immediately jump $3? Or would it be a little bit more measured of a move? I don't know. Would it matter? I don't know. But that's just where I'm saying that, like, I think that the reactions that you're going to get, because of the way that the news is coming out and everything, might be a little bit less predictable than usual. So you could see, so here we had a situation, the way I'm reading this, and I'm not saying it's confirmed, but I'd say we have a pretty good idea, at least, that we had we had a report on Twitter. I think that report was real, but the alarm was a false alarm. That's what I think happened. And so you saw some markets move off of that and some other markets not. The treasuries reacted quite strongly to that. The equity market reacted marginally to that, but oil did not really react. I think that it's entirely possible you could see another headline come out like that, some piece of information that's not like fully confirmed, and have oil move off of it and not the treasuries, for instance. You know, I don't think that like one group of traders has a explicitly better view on what is happening during a live war situation than another set, you know? You are correct that sales are already moved quite a lot, but if it was really true, you would have seen a jump in volume. Yeah. But all that says to me is that the oil traders weren't listening to that particular news squawk, right? That says to me that the news squawk that all of the oil traders at the big oil companies use a different news squawk and didn't get that one. That's what I'm thinking. Here's another thing though. We were, before all this happens, we were below 19. In fact, I'd even say, you know, there was like the 16, right? I was taking a short down in the 16 area before that kind of came up, and I'm like, something's not right. So, you know, you could consider what's happened here in the treasuries just a pullback. Like, even if that report was false and the traders are bailing on it, and that has kind of all equalized back out, because the cumulative delta is about where it was before the move. So it does kind of look like there was like 10 to 15K bought, 10 to 15K net sold, sort of a thing, right? It still has had a permanent impact on price that is higher. So the risk off trade is still kind of has the advantage, let's say. Also, want to point out over the last few minutes, what is this chart? Is this a 1 minute chart or a 5 minute chart? It's a 1 minute chart. Okay, so over the last 2 minutes, we're starting to see a run on the dollar higher. Saudis will sell 20 billion of Aramco to fund NEOM. Okay. I wish I understood what that was about. That sounds like something important, Alex. Like it does. Aramco is a big company. The state-sponsored company, that whole thing is really fascinating to me. I'm interested to see how that ends up going in the long run. Yeah, my short was at 487, by the way. Oh, Neom is the future city? No way. Really? Okay. You know, the future city thing kind of sounds dumb to me. To be honest with you, like, here's my problem with it. Is the whole thing of like being based on like a line and having one major transportation corridor that is public transportation sounds like a bad idea to me. Sounds like a naive idea that, you know, they will get partway through it and realize how stupid it is, and then we get to watch all of these great documentaries about how was something so dumb able to get so far, and yada yada yada. Because it does sound like they're serious. Like they do want to build it. That's for sure. Right? Like at this point, it's not just like a vaporware. I think when it first came out, a lot of people thought it was just vaporware. Like they're saying that, but then they'll never actually do it. But then they actually started doing stuff with it, right? So I think they're gonna try it, but I think that partway through the project, they're gonna realize it's a bad idea. So, with that in mind, very interesting that they're willing to sell their Aramco, more Aramco, to help fund that. That is very fascinating. They are way more invested in this idea than I thought. Well, what do we think about this? I think that this move up here is just kind of like the after effects kind of rotations. I'm not going to read too much into it. Maybe it continues higher. Maybe it reverts back to this 21. We'll see. They're promoting Saudi Arabia as a tourist destination now, too? Well, hey, I would love to go on vacation to Saudi Arabia. I don't know if that's a good idea, but I hope that maybe someday, if it's not a good idea right now, that someday in the future it is a good day. I think that would be... Right, sorry. Yeah. I hope that if it's not really that good of an idea right now, that in the future it will be. I can only hope that things in that area of the world will cool off and relations will improve and that it could be a tourist destination, yes. They could make tons of money from that, yeah. Saudi Arabia can build it for cheap, though, as they basically have slaves. And if you didn't know that, well, yeah, sure. Sure, but that doesn't mean that it's a good design for a city, though. That's the real problem. The real problem is that it's a poor design for a city, as far as I can tell. Okay, they're right back here. I don't know, man. I've got 20 minutes left. I could try getting back on again. But I bet you as soon as I do, they can be like, nope, that's all there was. Seth. Sorry, we're moving back down now. Now, there is a large meta order coming through here. All right. Well, I was a little slow on the draw there. Let's see if they bust these... We are getting like pretty consistently long flow here, though. I guess what I'm trying to say about this one is that I don't think that this is necessarily a headline-driven one. I mean, that could be related. But we're getting like a larger meta order in here. Like somebody's deciding to do something. Maybe somebody has decided to come in and sell equities and buy treasuries here today. Because it's been doing this for the last 10 minutes. Just really consistent, steady, imbalance long. And there's a decent amount of orders pounding on that 24. They're probably, now that I've gotten involved, they're going to toy with it, right? If I had gotten it 8-7 where I was supposed to click, that would have been, then I'd probably be really happy right now, right? Nope. Down tick. I would have thought that they would have recovered that down tick by now, too. So that's not a good sign. And I should be seeing the flow continuing to come in long, but the flow seems to have subsided substantially. Okay, there's that kind of attempt at an uptick that I was hoping to see. 1830. Okay, that's a little bit better of an attempt. Not a whole lot bidding there, though. Most of their buildings make no sense, in all honesty. They just build these huge projects for, well, a lot of crazy things happened in Dubai back then, yeah. They never really recovered from that either, did they? Down tick again. That's not good. Come on. You can do it. I believe in you, buyers. Come on. That's a little better. Can we get a 2,000? Anybody? Anybody? 2,000? I'm not even willing to flip it. Come on. Spoos broke those lows too. I didn't notice that. So spoos are pretty unhappy. I think my best theory for what's going on at the moment is still that they're puking equities and buying treasuries. That they've kind of turned more risk off here in the last 30 minutes. Okay, that's a little better. Okay. So what's the top of this? 23.5? Nope. Down tick at 22.5. Well, I'm thinking I just can't catch a break today. Probably trying too hard. Not a huge deal, but I am starting to feel a little frustrated by it now. And it does look to me like the flow that I was following has died down just as quickly as I get in. It really feels like it is just explicitly trading against me is the way that it makes me feel, you know? She being like that again. Moves so easily, and then when I get involved, it stops. I don't know if it's targeting my stop loss per se. It's really more, it's like as soon as I get in, the flows that we're pushing it that way like die out. So like what we've got right now was a decent rally. And then as soon as I got excited and decided to jump on board, the imbalance of market orders to the long subsided, and we have now settled back down post meta order impact area. So like that's probably just a function of me being slow. It's probably just a function of me being slow, because I had one spot where I could have gotten like 8-7 or something and I didn't, right? And I kind of suspect that you will see another wave of that long order flow, but it might be until long after the stream is done, because then we're going to shut it down at the top of the hour. Might be well done by the time that that next wave comes. So but it's kind of been doing this to me for a while, where it's been really hard for me for some reason to get favorable ticks. This one hasn't been favorable at all. Probably I should just already be out of it. Because at this point, I'm like kind of hoping that it comes a tick or two back so I can fail. But see, there you go. Now it's 15. I did get some favorable ticks on the one, but only 8, not 10. So I should also keep in mind it is a Friday, so like the longer this goes on, the more difficult these may be. And they're kind of going with that price a little bit. All right. Well, I should take that one because, you know, with the earlier ones, That gave me a little bit of room for this one, but now that's the third one. So now, even if I had more time, I would probably not take a trade because that's 3 losers in a row. 3 losers in a row and 25 bucks. So for 3 losers in a row, I want my losers to be under 10. So that's good. But I'm just not having much luck with this lately. And then it's not even that my read was terrible. I think my read was okay. And you see that as soon as I fucking get out, it shifts again? What the actual fuck? Good grief, man. It really, really feels to me like it's trading against me, man. It'll do this. It'll get in that mode. And then I'll kind of stop trading and go away for a while so they forget about me. And then I'm okay. And then it comes back. But now this time, I come back and they're still there. Still doing that. Still doing that bullshit. So frustrating. And I really don't think that it's me, though. So I'm not sure what that's about. Yeah, but I could have scratched. What was it? 4-9? No. I took 4-8-2. Did I really? Okay, well that's terrible. Either way.
Block
But there was a little bit of flow. Okay. I don't know, guys. I gotta shut things down. I'm not gonna do anything with that. But it's time for me to get to work. So, kind of looks like it's not done yet, though. They could toy with us all day. We'll see what happens. I'll see you guys on Monday, though, all right?